Well, this is a very big point loss, but remember that the level of the stock market is much, much higher now than it was in 1987. As a percentage loss, it's less than 1/3 as much as happened in 1987. It's still a big percentage loss, more than 5% down today, but the stock market is still only back to the level of early June. It's still up quite a bit for the year. So the equity market, even after today's loss, is still not doing all that badly for 1997.
Would you ever have associated today with the word panic?
I don't think it was a panic. I don't think that's the appropriate term to use. There is a market event. The global markets have been going down. They started last week in Hong Kong, and this thing has probably a little more time to run until it all settles out. But I don't think we're necessarily going to go that much further than where we already got today.
In very general terms, because as I keep pointing out to people, so many millions of Americans are now involved in the stock market in small ways as well as large. What would you tell people to think about between now and tomorrow?
Well, you know, it's very important not to panic and not to lose one's head here. The stock market is down about 13% from its peak, which was back in August, and that's a very significant correction. I doubt the correction is going to get that much deeper. It's usually a bad idea to sell after the stock market is already down. You know, it's also very important to keep in mind that our economy remains in very healthy shape. We're not going into recession. We're going to continue to grow in 1998, and on top of that, there is a silver lining to all of this. The silver lining is the interest rates are down as a result of the stock market being down. And the Federal Reserve, which looked like it was getting ready to send interest rates up, is surely not going to be doing that now. It's going to probably sit tight, and it may even have to cut interest rates.
I have one last question for you, and it's purely for a technical description. The market today is down 554 points. It is down 7%. In round figures, and you guys call that a correction. What's a correction?
Well, keep in mind that our market is up something like 15% for the year. Correction is in the 10 to 15% range. If it gets any worse than that, perhaps we're into different kind of territory.
Okay. Thank you very much, Bruce Steinberg, very much for joining us, and Todd Buchholz. Just before we leave you, we want to check in briefly with the White House, because at the White House today, they have watched this as carefully as the rest of us. And John, the sense I got listening to the press secretary's briefing was hands off, we're all cool about this.
We know, Peter, that the president is watching this and listening to it, but he's not talking about it, at least not in public. His spokesman, Mike McCurry, says that it was actually as the president was giving a speech about how healthy the economy was that the market began to tank. He was advised of that. He also got a bit of a lesson from Treasury Secretary Robert Rubin, who was called in to explain to the president how the circuit breaker system works. But the White House does not want to comment upon this. They are trying, however, to adopt a position that they are calm, and all McCurry would say specifically was, remember that the fundamentals of this economy are good and they are sound.
Thank you very much, John Donovan of the White House. Look forward to hearing from you and the White House on World News Tonight. And that indeed is what we have seen today. The market go down enormously, but these corrections put into place, or these circuit breakers put into place, the market closing first for half an hour and then for an hour, but continuing to go down so that it loses more than 550 points by the close for the day. That's almost 7%. But as you've heard several other people say, don't panic. Don't run to sell off your savings necessarily that you have in the market, because that doesn't begin to compare with the enormous drop that occurred in 1987, which led to so many of these circuit breakers, so many of these guardian points being put in after the market dropped so devastatingly then. We'll go over this and a good deal more later on during ABC's World News Tonight. I hope you'll join us then. I'm Peter Jennings in New York.
An exuberance that was built into the American market, rather than being fundamentally caused by what's occurring in Asia, which probably will slow down the earnings growth of some companies, but probably not as much as the market has reacted.
But gentlemen, the trading, a lot of people here wondering in the audience, the trading, was it stopped to halt just some bleeding or to stop a panic? What do you say about that, Ron Hill?
Well, Nick, the original thought was that if you could stop and think about it, you could regroup your forces and then, come back in with a more rational response to a situation. Unfortunately, anytime you give somebody a target, especially a trader, the first thing he's going to do is go after it. So what has happened today is we went right for the 350. We bounced once before we hit it, and then we came down and closed it. And the minute we opened up after the 350, we went right for the 550 down limit target. I think that's one of the problems with having a situation where you actually stop trading, is because people people realize that there's only a short window in which to get the sales off, and the buyers say, well, I can wait until the sellers are done. And therefore, you know, there's a speed up on the selling when you have windows like this, and there's also a reason to hold back on the buying, and that's, I think, exacerbated it a little.
Which leads to a question on our website from Martha Gershik. She says, what measures are planned tomorrow if this thing keeps falling, if the Dow Jones takes even a bigger plunge or continues to spin downwards?
I think you know, these curves roll over from day to day to day. So you'll open up tomorrow, and if you're down another 350, you'll close for 30 minutes. If you're down another 550, you close for another hour. Those are the kinds of things that, you know, it's kind of a rolling, as I understand it, set of curves that go on here.
Okay, our guests are Richard Huey, Peter Cardillo, and Ron Hill. We have a question from our audience, an observation. Lou from New Jersey.
Nick,
yes.
I'd like to ask a question. Why should we panic, or why should we even worry? I was a former trustee on a union pension plan that had $100 million invested in 1987. It was Black Monday, lost 22%. 8 months later, it was recovered. Now we're speaking of 7% reduction. I think it's meaningless, and I don't understand all the hype, because I believe it'll panic the little investor. He'll be withdrawing his money. The big institutional investors will jump in like piranhas and make another $1 billion like they usually do.
Ron.
Well, here again, I think that most of the people in this room would like to agree with that phenomenon. Again, we've said repeatedly, we find the underlying fundamentals still look very good here. Corporate America is probably as globally competitive as it ever has been. The workers are more productive. The investment that's gone on in business here has been truly spectacular, and we've seen it in an unprecedented growth in earnings for the past 6 years, of double-digit gains over the last 6 years. So, again, you know, that's like I think Dick said earlier, let's not be spooked out by a little bit of motion here. Keep your long-term perspective in there. This is long-term money. The history tells you that the best long-term returns over any 5-year rolling period have been in equities.
Well, back on our website, David Schultz asks, is any of this crash media-induced? For example, this was all over the, this is all a lot of people talked about. So does the media get the blame here, Richard Huey?
I think actually there's some possibility of that. I think that the general attitude of professional investors is that the fundamental development, which is some erosion of foreign profits of companies that sell into Asia, is real but relatively modest. And in terms of an environment in which long-term interest rates have been coming down, I think without the media focus, probably we would have had a little weakness, but not nearly to the degree that we had. The other element, however, is that there's a lot of momentum speculation in the stock market and in the S&P futures. And basically, I think that investors are in a different business than those who are engaged in momentum speculation and short-term speculation. We're trying to achieve a rate of return over the years so that we can retire with the proceeds of our investments. There's an awful lot of speculation that's built up in the stock market. When you have speculative markets, occasionally you get these very, very rapid corrections that tend to shake out that speculative fervor. And I do think that Chairman Greenspan did recognize some elements of speculation that have built up in the marketplace, but this has been a bad day for the speculators. And they're entitled to a bad day once in a while. For the investors, it just means that they've made not as much this year in their stock investments as they thought they had a week or two ago. But the market's still up over the course.
Generated. That is, it's not actual sell orders. It's just the computer saying sell, right?
That's right, yeah. And in fact, we'll know more tomorrow. They were hoping after the first close today, the first halt to trading, that people would have a chance to catch their breath, the machines to catch up, the computers to catch up with the orders, in fact, if there was some imbalance there. In fact, when the trading resumed at 3:06 today, there was another fall in the markets.
No kidding. A huge one. I hope this isn't a metaphor for the economy.
Let's just get out of this month, Chuck.
Yeah, no kidding. Thanks. Next in sports, a Super Bowl rematch in Monday Night Football, and the Marlins savor their World Series victory.
Of course, it was an abbreviated session, exactly 1 hour worth of trading subtracted from the day. We have also the transportation average getting hit today, down 234 points. All these declines between 6 and 7%. The utility average down sharply at day's end, off 9 to 237 on the day. Market internals decidedly negative, with declines beating advances almost 29 to 1. We had 262 issues unchanged, 22 new highs, 193 new lows. The S&Ps closed the day down 64.5 points at 877. The NASDAQ pounded, as David Faber told you, 6.7% off, 114 points on near record volume of 906 million shares. Were there not trading halts today, NASDAQ volume would have likely topped 1 billion shares for the first time ever. As for the Russell 2000, also hit hard, off 27.5 points, while all of this stock market money simply went into U.S. bonds. The 30-year Treasury bond for this session finishing, or I should say still trading, up 1 and 12/30 seconds now to 102 and 23/30 seconds. That is nearly the lowest yield for the year on the 30-year Treasury bond. A few weeks back, it got as low as 6.16%, but suffice to say this is a 1997 low in yields, a flight to quality taking place in the Treasury bond market today. All right, the largest percentage drops in the past, of course, included the crash of '87, when the Dow declined 22.6%. By comparison, today the Dow Industrial Average off nearly 7.2%. The transports off 7.25%. The utilities, to an extent, were held together by a bond market that continued to soar throughout the day. The Dow Utility Average sliding 3.75 percentage points, paling in comparison to the declines we have seen elsewhere. The NASDAQ down 6.79%, while the S&P 500 fell 6.8% on what will very likely be called a Blue Monday. All right, let us head back now to the floor of the New York Stock Exchange. Our own Bob Pisani has been polling traders, specialists, and brokers on the floor, and he's here now with more insights on today's activity. Robert?
Hi, Ron. Well, it's interesting. We had the Dow down, roughly 7% today, but I watched some of the tech stocks, some of the financial stocks drop 10 to 15%. I've been keeping an eye on those Latin American stocks. I saw stocks like Telebras, Telefonos de Mexico, TAR, the Argentine telephone service, drop even more than that in the 10 to 15% rate. So really quite a bloodbath today in the techs and in the financial sector. I mentioned earlier about 2 o'clock when I was talking to a lot of traders, we weren't hearing a lot of institutional selling going on. It's interesting that now towards the end of the day, as I keep polling traders, I said, had it changed in that last 2 hours? The answer is yes, it had changed. They had seen more institutional selling going on. The mood started turning ugly right after we reopened about 3:05, and that's when traders started getting very, very nervous down here. Remarkable how orderly it was when I came down on the floor to see even the specialists standing around doing really nothing, but not a real strong sense of panic. There is some concern down here, though clearly they felt that the market deteriorated rather rapidly, and most of the traders I have just walking around here polling right now feel we're going to have a down open. Of course, most of them keeping a very close eye on Hong Kong. Several of the traders saying they're looking, though, to buy, but they want to see, one trader said, blood in the streets, to coin one old industrialist phrase. One person said, we're looking for wide spreads between the bid and the ask, a classic sign of a market bottom, and also seeing individual stocks halted because of certain problems, trading problems. That's when people want to step in and buy. They haven't seen that right now. Some of the stocks down. Travelers down $8 today. JP Morgan down 7 5/8. Alcoa down 7 5/16. Merck down 7 11/16. I just got off the phone with Bill Meehan at Cantor Fitzgerald. He says the next level of support on the S&P 500 is at 850. That was in late May, very early June. He also noted today that the put-call ratio on the CBOE, the Chicago Board Options Exchange, was 1.54. More puts than calls, obviously, but surprisingly that there weren't more than he expected. There were not as many as he expected. And another one, he is another trader expecting to see a down day. It's tough to scare up buyers, quite frankly. That is the mood right here on the floor. Ron, back to you.
All right, Robert, thanks very much. Bob Pisani at the New York Stock Exchange, which is much quieter than it normally is at this time. If you are just joining us and you are preparing for the closing bell on Wall Street, you should know that it already rang. It rang just after 3:30 Eastern time today, when a decline of 550 points prompted the second trading halt to be enacted at the New York Stock Exchange as part of the new rules implemented after the 1987 stock market crash. A decline of 350 points at the big board produced a half-hour halt. A further decline of another 200 points prompts a 1-hour halt. Well, both those things happened today, and the market closed at 3:30 thanks to a 554-point decline at the big board that you can see printed in the bottom right-hand corner of your screen. If you are joining us from MSNBC, of course, the market, as we said, closed. The Dow down 554 points on the largest single-day point decline in the history of the U.S. stock market. The Dow, though, not suffering its biggest percentage decline ever. My colleague Sue Herrera is by my side at the moment here to talk about what's happened in other markets. And Sue, you know, while gold prices actually, to the extent that they traded today, went a little higher in a flight to safety move, but of course there was a big downdraft on Friday. Gold stocks did not. It looked like the only place anyone found refuge today was in the U.S. bond market.
Indeed, and we should note that the gold market had some trouble with trading today. They had some electronic trouble, so they couldn't get the market open for as long as they usually do. So the gold market had a pop, but we had a huge drop on Friday. So was it a flight to quality, or was it simply a recovery on some short covering from last Friday's drop? Bond market and the short end of the yield curve, or the 3-month bill, the 6-month and the 1-year, is where most of the money went. We should note that the 2-year note, which has been a favorite of traders and investors alike recently, broke below the 5.50 level. And the reason that that's key is that that is also the level of the Fed funds rate. So now you have a short-term security trading under the shortest-term security, in essence, the Fed funds rate.
Which is in your inverted yield curve to an extent. Yes.
Exactly. And as a result of that, that has really brought some caution into the market, if you will. The long bond now last trade is up 1 in 4/30. That puts the yield, if I'm not mistaken, at the lowest level since February 14th. It's a little iffy right now because the market hasn't quite settled yet, but about February 14th. The U.S. dollar was also another focus today.
Now, Sue, were it not from selling that I heard took place at the Soros Institution, where he may have lightened up on some of his bond holdings, the Bank of China was said to be selling 5-year Treasury securities. Were it not for that, it seems bonds would have gone an awful lot higher, since there was kind of a bid on top of the market all day long.
Indeed, there was. And it was almost as though you could feel the fact that traders wanted to push this market higher, but because of those other two factors, they weren't able to overcome the amount of selling. And that may be one reason why they decided to desert the bond market and go to the short end of the yield curve. We don't know that, of course, but it may be why they chose another instrument, because it was simply easier to move and easier to get your money in and also get your money out if you need to get your money.
All right, thank you, Sue. We'll see you, of course, again at 5 p.m. Eastern Time on the 2nd. An abbreviated session, twice interrupted by trading.
Thanks so much. That's Ron and Son on our sister network, CNBC. We've been listening to their coverage of this stunning event on Wall Street, the Dow Jones Industrial, losing more than 554 points, trading suspended at 3:30 Eastern Time today. It is the largest one-day point decline, as Ron just said, but not the largest drop in percentage terms. MSNBC is going to continue to cover this story. For the rest of the day, we'll have some expert analysis for you when John Siegenthaler is here on Your World, Your Way. And then at 5 p.m. on News Chat, we'll be taking your calls and emails if you have some questions about what it all means. So stay with us. We'll be right back.
If you watch Montel, you just heard from
Philadelphia's NBC10.
Serving Pennsylvania,
New Jersey,
and Delaware.
Now live.
This is News 10. First at 4.
Their worst single-day drop in history, and trading is halted twice. News 10 has full coverage on both stories. Good afternoon, I'm Larry Menti.
And I'm Renee Chenault.
We're going to start with the stock market free fall, the biggest one-day point drop in U.S. history. It's fallout from a financial crisis in Asia. Now it's causing stock market madness for us. This is the history-making scene in New York. Traders just milling around with nothing to do after the Dow drops 350 points, triggering an automatic halt to trading. When the market reopened 30 minutes later, the plunge continued, with the Dow ending the day down 554 points, the biggest one-day drop ever. News 10's Ken Matz is live at the Philadelphia Stock Exchange. Ken, what does all this mean?
Well, I'll tell you, Larry, first off, nobody's jumped out of this building, but it is October. That's the month of 3 previous crashes, and it is only Monday. This was a history-making day. For the first time in 10 years since they were implemented, the New York Stock Exchange and exchanges all over the country implemented circuit breakers twice. Circuit breakers are devices that stop all trading on the floor and give investors time to take a cooler head. Now, here at the Philadelphia Exchange, they would not permit our cameras inside to look at what was happening on the floor during that circuit breaker delay, or before it, or even after it. At the Philadelphia Exchange, we saw the traders, though, leaving for that half-hour unplanned break. But down the street, only a handful of investors at Charles Schwab worried. And one trader told me what it all means.
You know, a tree doesn't grow to the sky.
Which means what?
Which means prices don't go up forever, you know.
Is this a good time to reevaluate your portfolio?
I think whenever something major like this is going on, it's always a good thing to stand back and take a look at what your portfolio is trying to accomplish for you.
Question, did the circuit breakers work? Well, they didn't the first time. The Dow plunged down to 500 points, and the second circuit breaker closed the exchanges for the day. What'll happen tomorrow, that's another story. And should you buy or should you sell? Well, as the man said, investigate your own portfolio and look at risk versus your goals and how much time you have. 10 years ago when the market crashed, if you'd stayed in, most investors would have done very well indeed. Reporting live from the Philadelphia Stock Exchange, Ken Matz, News 10.
Ken, you know, you said it yourself, so many questions here. I mean, is this a case of the dreaded P word? I mean, is this a panic we're seeing taking place, or is it just investors taking advantage of the dropping market?
Well, let me tell you something, and I can only answer this question this way. When they implemented the circuit breakers the first time at the Philadelphia Exchange, the traders applauded. They were happy at making history. When it happened the second time, no one applauded.
All right, thank you very much, Ken.
Well, our other top story on News 10 First Report.
People don't really know what's going to come next, and so it puts a little bit of a drag on it. Then it depends on whether we truly have seen the end of this market decline, in which case people would get their confidence back pretty quickly. If this was just a so-called correction, like the corrections that we saw earlier in the year. We saw one of those in March and April when the market was down 9.8%. We saw another one in August when the market was down 7.7%. Now with this decline, in the last 4 trading sessions, the Dow is down 12.5%. So that is a serious stock market correction. If it turns out that's all it is, then people will get their confidence back. But we won't know that for a couple of weeks and maybe even a couple of months.
It was quite a day to watch the market. Mike, thank you very much.
All right, John.
These words, be calm and reasonable. They were from White House Press Secretary Mike McCurry, and NBC's David Bloom is standing by at the White House with more reaction from Mike McCurry and the White House. David?
John, the White House has spent the better part of the last hour trying to reassure the markets, trying to reassure the American people and specifically investors. You alluded to some of what the president's spokesman, Mike McCurry, had to say. He said that we want everyone just to take a deep breath. Let's just be calm and reasonable, as you say. Mr. McCurry was briefing reporters during the time that the market was falling from 350 points down to roughly 554 points down. Perhaps the most significant thing he said is that the president still believes that the stock market is, quote, fundamentally strong. He said that the president had been briefed by Treasury Secretary Rubin that the Securities and Exchange Commission, the SEC, the Treasury Department, and the Federal Reserve were all monitoring the stock market. Here's some of what Mike McCurry had to say.
There are systems that are in place to monitor market activity like this, and that they would normally, on a day that's very volatile like this, have that kind of monitoring.
And so other than monitoring the markets, there's little that the White House is doing here. You'll recall that a lot of this sell-off, analysts say, was triggered by the plummeting stock market in Southeast Asia and specifically Hong Kong. There is talk here at the White House of having the International Monetary Fund and the World Bank step in a multilateral, multi-country fashion to try to intervene in that situation to calm the markets there so that it would have some further calming influence here, but nothing concrete at this hour.
All right, David Bloom at the White House. David, thank you very much. We now go to Los Angeles, where CNBC's Brad Good is standing by with more reaction to the wild ride on Wall Street today. Brad?
John, I'm at Kennedy Cabot Brokerage House here in the financial district of Beverly Hills along Wilshire Boulevard. You know, a lot of anxiety here as well. You know, this is almost like covering a Southern California brush fire. We all keep wondering when the devastation will stop, how much financial devastation will take place. It's been similar, that only we're covering in a suit, of course, today. A lot of the brokers here today running between their telephone, their computer screen, and, of course, the television set to continue watching the drop that took place today, and then, of course, scrambling after the market shut down to see what move is next. To check in on the mood, I want to bring in Jose Fernandez. He's the marketing director here at Kennedy Cabot.
Thank you.
You haven't seen anything like this before. Tell me about the mood inside the brokerage
I did
house.
back in October 1987 when the market dropped, 509 points. It was something very similar. But, yeah, today was another big day, the second biggest loss.
You've been doing this for a long time, but
That's
even
right.
you told me about an hour ago you're a little nervous. A lot of phone calls are coming in. What are you telling investors? What can you tell them as it continues to plummet?
That's true. We saw more sales than buys. But, what we pretty much tell our clients is that, look for the long term. If you're buying stocks, look for the long term, because see what happened back in '87. Look what happened to the Dow today.
Of course, you guys have to keep a stiff upper lip and remain confident, but you would have to expect some more sell-off tomorrow from some of your clients that weren't even able to get in by the end today.
That's true, and it will be interesting to see what's going to happen tomorrow. But once again, I just want to say that the economy is in good shape, good growth, low interest rates, low inflation, low unemployment, good confidence, good productivity levels, and overall I see that we are in good shape.
Nevertheless, a lot of phone calls today, a lot of late hours tonight around here.
That's correct.
Okay, thanks. Jose Fernandez, the marketing director here at Kennedy Cabot Brokerage House, keeping a stiff upper lip. The lobby's been filled. I spoke with a couple of senior citizens who were in here getting on the computers, and of course they were very concerned. I spoke with one woman named Lee. She says she's down about 25%, but she says, I've been in the market for decades and decades, and she said, I'm just going to hold fast. I'm not going to do anything drastic, and we'll wait and see what happens tomorrow. So we have to see. Obviously, some people that want to sell tomorrow and some people that are going to hold on. Reporting live.
I was going to say, Brad, as I look behind you there, everybody seems to be on the phone. Tell us about the level of phone calls they got today.
Oh, yeah, definitely an increase in telephone calls from what Jose said today. And they've been scrabbling. The phone lines have been ringing off the wall, if you will. The lobby over here to my right has been full most of the afternoon since we've been here. People continue to come in right off of Wilshire Boulevard and get on the computers they have here at the brokerage house to find out what's going on and, of course, to find out what they should do about some of their investments.
And we'll probably be a busy day tomorrow. All right, Brad Good with CNBC. Brad, thank you very much.
You're welcome.
Now, this financial market free fall is global. We want to go to our London bureau, where Justin Stewart of Barclays Bank is standing by live with more reaction to this. Justin, welcome. Thank you for joining us.
Thank you.
Give us your reaction to what's been going on in this country today.
Well, obviously, it's extremely worrying when we see what's happened. We missed the worst of it this afternoon. When we closed, you were obviously halfway through your day, and then the major slippage started after that. So we have a rather worrying night as we sit here and wait for Hong Kong to open to see whether we're actually going to follow through. And I think there's a very good chance Hong Kong will feed on what they've seen in the States, and we'll carry on from there, unfortunately.
So what's your prediction?
I suspect the London market could easily drop another 100 or 150 points just on the back of what's happened because, as I say, we shut earlier. But really, the fundamentals here are still really rather good. This is the big difference between now and 1987. We're obviously hitting a bear market as far as I can see, and judging by some of the figures we've seen in the past few days, it's a pretty grisly bear. But now, really, you compare it with 87, there's no sign of the I word, the inflation. Inflation, we could see figures quite clearly then in 87. You can't see it now. But then again, that's the problem with a crash. You can never see it coming.
Yeah, of course, and that is the problem, as you mentioned. Now, give us an idea, in your opinion, what caused this?
Well, it has all come about, we can actually sit there and try and blame Hong Kong as being the issue, but in fact that wasn't the cause. It might have actually been merely the trigger for it, but as a series of markets around the world, particularly the UK market, particularly also the US market, we've grown extremely well on the basis of what's been described as the Goldilocks economy, neither too hot nor too cold. But of course the trouble with the Goldilocks economy is three very large bears come around the corner, and I think they've just arrived.
All right, we're going to take a break now, and we'll come back with Justin Stewart from our London bureau with more on Wall Street right after this.
Welcome again to viewers on CNN International, CNN Headline News, and of course CNN Financial News, CNN FN. The market today trading halted twice, the first time that circuit breakers put in place after the October 19th, 1987 crash have ever been implemented. Those halts in trading instituted after the Dow Jones Industrials first fell 350 points. Trading was resumed at 3:06 Eastern Time, and then approximately 24 minutes later, trading again halted on the New York Stock Exchange, the NASDAQ, and the American Exchange, and Chicago, as the Dow Jones Industrials fell more than 550 points. Catherine Barrett is standing by live at the New York Stock Exchange on what has been an historic day. Catherine?
Lou, traders and floor specialists and exchange workers exiting the New York Stock Exchange this afternoon are generally grim-faced. They're not happy, many of them sighing, a bit exasperated to see the throngs of reporters who are waiting for them after what must have been a very bad day at the office. One said simply in declining an interview, "I'm really tired." And he looked it and he meant it. Certainly a very tiring day. People say they're happy to be leaving early. They're not happy with the reason they're leaving early and the market's big drop. Another said that what happened today was reminiscent of 1987, but that people were calmer. There was not the sense of panic in the market. People have been through this before, at least those who were there then. Perhaps also the knowledge that there was some bottom in the market, that those trading curves would kick in, that the market could not drop more than 550 points, contributed to that sense of calm. But traders have not been through those trading curves before, and one said that there was some suspicion that the trading halts, in fact, gave just simply time for people to pile up more sell orders. So a very grim day at the New York Stock Exchange. People generally unwilling to talk to the press. Lou?
And understandably so, as the Dow Jones Industrials dropped more than 550 points, a better than 7% correction. Catherine Barrett, thank you very much for that report live from outside the New York Stock Exchange, where we will be going back to you for further reporting. Again, the New York Stock Exchange Composite Index, the S&P 500, the Dow Jones Industrials, the NASDAQ Composite, and the American Exchange Composite, all losing from 6 to more than 7% on the day. Please stay with us as CNN FN continues its coverage of this market break.
There dropped 6% of its value last night. The Dow lost 7% of its value today. The White House is telling investors, don't panic.
That would maybe lead people incorrectly to make assumptions and lead all of you to become breathless. And we want everyone just to take a deep breath and think about where we are. This is a market that has performed amazingly well in the last several years. It is record levels. We've talked about a fluctuation in the market today that is a bare fraction of, major breathtaking drops in the past. So let's just be calm and reasonable.
Destroy everything that lives! I won't let Earth be destroyed! Let's go
Activate interlock. Advance your mega thrusters.
After a day like today, when we have the trading stop, there's almost anything possible. But if we look back at 87, we might see the market go down a little bit and then begin to rally, because prices have dropped quite a bit.
Bargains out there. Thanks, Joel, for joining us live from Center City. Joel Neroff, who is the chief bank economist of the First Union Corporation. We'll keep watching the markets. We'll have more on it at 5:30 live from New York. Lisa?
And as we said just again, show the volatility of the stock market in October. The biggest percentage drop came 1 decade ago when the Dow lost more than 22%. The crash of 1929, October 1929, may have only been in the 30-point range, but that was enough for successive 12% drops and the Great Depression. Today's 554-point dive only represents, as we've just learned, a 7.2% decline.
More of us than ever before are invested in the stock market through stocks in the companies we work for, mutual funds, or retirement accounts. So what should we do now that the markets are heading south? Joining me now, longtime Wall Street observer Jordan Goodman, publisher of the Money Answers newsletter, which debuts in January. And Mr. Goodman, we may be interrupted here at any moment by Treasury Secretary Robert Rubin.
That's right.
Expected to step out as the administration has been pleading for calm throughout the afternoon following this drop. Would that also be your appeal, not to panic here?
Absolutely, and most people with mutual funds and 401k should not be selling into this kind of market. As we've learned over the last few years, you don't sell at the bottom. This happened after the Mexican peso devaluation in 1994, the crash of 1987. Every time the people that got hurt were those that sold at the bottom, and that's a similar situation today. This is not a time to panic. The economy is fundamentally sound. And they're really, okay, the market may have been a little bit overvalued, but not so drastically as you want to be selling after it's down about 11%.
So I've talked to some folks today, many of whom are invested more than 50% of their 401ks in the stock market. They say, oh my goodness, what does all this mean for me now?
Well, it means you're going to see some bad statements for the fourth quarter. But in the long term, in fact, remember when you have a 401k, you continue to buy on a regular basis. So when the prices, in fact, go down, you end up buying more quality stuff at lower prices. So it could be good for you as far as getting some of these things at lower prices.
You're saying we'll get a bad statement for the fourth quarter. You must know something we don't.
Well, I think this is going to go on for a while. This is not a one-day phenomenon. The whole Asian situation is clearly unraveling right now. And I think you're going to see more selling tomorrow. But you have to be able to have patience and not panic during these kind of things. But I don't think the downdraft is over by any means right now.
So you've earned in the past year or two. How do you protect what you've earned?
Well, if you do want to protect it, within a 401k, you could certainly sell some of your stock holdings and go into a cash kind of holding so you don't have any further losses. But it's very difficult when you make those kind of timing decisions. You've got to make two right timing decisions. One's when to get out and then when to get back in, and that's always hard to do. I always advocate for the long-term, consistent so-called dollar-cost averaging, where you keep buying on a regular basis and you'll come out best that way. Most people do not do very well at market timing. A lot of people are going to say they called this one. Almost nobody called this market decline.
So if a person is scheduled for retirement, say in a year, 2 years, is there something they should particularly take note of at this time?
Yes, in a case like that, when you need the money within a relatively short period of time, then you should be more conservative. You should not have all your money in aggressive growth in vehicles when you've got only a year or two before you're going to need the money. You should be scaling back even before that time. But certainly if you're going to need it right now, I think taking a little bit of gains is not a bad idea. Long term, you're still going to make more money in the stock market. In fact, I think what this is going to do, all the turmoil internationally, is going to make the U.S. look that much more attractive. That's why you've seen a lot of money flowing into the U.S. Treasury market, for example, where interest rates have plunged in the last few days. We're down to about 6.25% on long-term treasuries because of people wanting safety. So that's what you're going to continue to see is the flight to quality. That means the flight into U.S. stocks, despite this crash today.
So when do you think a good time to get in? Now? Wait another month or so, perhaps?
Well, I'd wait a little bit. I do think there's going to be some short-term volatility continuing, but there's some tremendous bargains being created. The latest third-quarter earnings reports we had were really spectacular on the part of many, many companies. Their stocks have been hit down dramatically. Now, if they have bad earnings, they really get hit hard. Today, for example, Oxford Health Plans was down some 60% because it came in with a loss instead of an expected profit. Those are the kind of companies that are going to get hurt pretty hard. But a lot of companies out there are not going to be affected by this, particularly domestic-oriented companies. The ones whose are most volatile, I think, and most vulnerable are the multinational companies, IBM and JP Morgan and the companies out there, that have got a lot of operations in Asia. That has been seen as a positive up to now. Now it's going to be seen as a negative.
All right. Jordan Goodman, publisher of the...
Good evening, Natalie. So far, we've heard nothing from the president himself. The president has been briefed throughout the day by his economic team, including several conversations by telephone with the Treasury Secretary, Robert Rubin. Now, when the president's press secretary, Mike McCurry, briefed reporters earlier in the day, many financial markets were still open. McCurry said that was the reason Mr. Clinton chose to stay silent.
Because that would maybe lead people incorrectly to make assumptions and lead all of you to become breathless. And we want everyone just to take a deep breath and think about where we are. This is a market that has performed amazingly well in the last several years. It is record levels. We've talked about a fluctuation in the market today that is a bare fraction of, major breathtaking drops in the past. So let's just be calm and reasonable.
Now, ironically, this was supposed to be a day of good economic news for the White House. The president this afternoon announced that the federal budget deficit this year is just $22 billion. That's the lowest since 1974. And he said, of course, that the budget is now on path to balance. Generally, lower deficit numbers are good news for financial markets, but instead, as the president headed back from that event, he got the call from Secretary Rubin that trading had been suspended. Now, we're told that Secretary Rubin will speak momentarily about this, and the administration is hoping to project an image of calm before those markets reopen tomorrow. Natalie?
All right, John King at the White House. Thanks, John.
Worst days ever, triggering a shutdown of all U.S. stock markets. Good evening. I'm Stephanie Stahl.
And I'm Larry Kane. So what's up? Not many stocks today. Trading was halted today after the Dow plummeted more than 550 points, the worst single-day point drop in history. What does this mean to investors, big and small? News 3's Ren Scott is live in the newsroom with that story tonight. Ren?
Good evening, Larry. A very interesting day on Wall Street. Now, at 554 points, as you mentioned, this is the largest drop in the history of the Dow, but percentage-wise, this is not the largest drop in history. Today's drop was about 7% of the Dow. The drop back in 1987 on what was known as Black Monday, that was about 22%. So the message from many analysts tonight, this is indeed a major correction, but it is no need to panic. To halt the massive slide, the New York Stock Exchange was closed 45 minutes early today, and when all was said and done, the Dow had dropped more than 554 points. Many, like Bill Rogers of New York Republic Securities, said this is a correction that many had anticipated for some time.
Everyone expected this to happen earlier in the month. So everyone thought we were almost getting through October, and of course we didn't.
Earlier in the day, when the drop reached 350 points, trading automatically shut down for a half hour, a regulation implemented after Black Monday in October of 1987. When the market reopened, the Dow dropped another 200 points. But brokers stressed for the average investor, there is no need to panic.
We're up about 15% on the year, so it's not the worst thing in the world.
In the Asian economies, you've had massive building, you have had massive debt, very often non-collateralized debt to build buildings, which are now running 30% vacancy rates.
The cause of the slide is linked to a tumbling Asian market, as investors there sell off investments in U.S. markets to raise capital to pay off their debts. Analyst Andrew Palashewski says, we will likely see another drop tomorrow, but then the U.S. market should stabilize very soon.
So I think the markets can go down probably another 3 to 4%, after which they should reverse. Certainly this steepness of decline cannot continue for much longer.
And of course, what is going to happen in the next few days is what everyone is waiting to find out. Now, one bit of good news in all of this, much of the money out there now is going into treasuries as people seek shelter from the market. And as treasuries do well, interest rates will go down. And many are hoping that the drop in interest rates, which is now almost inevitable, will help get this market back on track. So, Steph and Larry, a lot of mixed signals out there indeed. A huge correction today, but people are saying the word right now, do not panic. That's the latest live here in the newsroom. I'm Ren Scott. Let's go back to the studio.
Thank you, Ren. Of course, Dan Rather will have more on the stock market troubles on the CBS Evening News at 6:30 tonight.
Late today, we learned what killed 2 Philadelphia firefighters over.
A frightening day on Wall Street. It was a record point loss. They tried to stop it, but nothing worked. The president appeals for calm, saying the economy is sound. We'll tell you about the big losers and give you the history tonight in depth. A small New York town worries about an HIV epidemic as a result of one infected drug dealer. 11 and counting so far. How many more? And our series on class action. A mother lode for some lawyers. Will a suit over Fen-Phen be the biggest gold mine of all?
From NBC News World Headquarters in New York, this is NBC Nightly News with Tom Brokaw.
Good evening. Well, a lot of people have been making a lot of money in this stock market, one of the most profitable markets of all time. But today, a lot of people lost a lot of money very fast. Now the question is, what happens when the market opens tomorrow? The stock market went into a steep dive from the opening bell today, losing 554 points at the close, forcing a suspension of trading so it wouldn't lose even more. The NASDAQ was down almost 116 points. President Clinton and his Treasury Secretary appealed for calm tonight, and in fact, as a percentage loss, this drop is only about a third of the decline of that famous crash in October 1987. We begin tonight with NBC's chief financial correspondent, Mike Jensen. Mike?
Tom, the only way to describe what happened here today was a selling panic. Stocks went into a free fall. It was a day many Wall Streeters thought would never happen. In the middle of the afternoon, with an hour and a half still to go and prices plummeting, trading on the New York Stock Exchange came to a dead stop for the first time in history. The Dow Jones average had plunged more than 350 points, triggering an automatic halt, a so-called circuit breaker, put into effect after the crash of 1987. to keep a market plunge from turning into a collapse. Then, 25 minutes after trading resumed, a second halt, after the Dow had plunged another 200 points, hitting another circuit breaker, ending trading for the day. Today was the biggest point decline in history, 554 points, 7.2% of its value. 10 years ago, on Black Monday, the Dow lost a stunning 23% of its value. To match that one-day decline, the market today would have to lose more than 1,600 points. But it was still one of the worst days ever. Analyst Alan Sinai.
Out in the Asia Pacific and in Japan, their economies are in trouble. That means the U.S. will have some trouble. We won't have a recession, nothing like that.
Small investors, for the most part, stayed calm.
It's a small blip on the screen. Most money today is in 401ks, and that's retirement money. Don't need it for 30 years, not a problem.
If it's 12 months, if it's 6 months, they'll come back up again.
The immediate trigger for today's sell-off was another big plunge in Hong Kong stocks. That ignited the sell-off in New York, but it didn't cause it.
The market has kind of been searching for a reason to sell off, and this reason happens to be Hong Kong this week.
The main reason stocks plunged in New York is that they've shot up so far so fast. Gains of 20 to 30% for several years running. Historically, stocks gain about 10% in a year. When they go up more than that, they often take a breather, fall a bit, before they start up again. On Wall Street, they call that a correction. This was the third correction so far this year. The Dow fell almost 10% in March and April, almost 8% in August, and over the last 4 days alone, more than 12%. Even with all that, the Dow is still up 11% for the year. The big question is whether this correction is over, and analysts say we should have the answer to that within a few days. Tom?
Mike, you've been talking to a lot of the Wall Street veterans. Many of them were anticipating this correction, but did they think it would be this big?
They never did. They were amazed when they hit the circuit breaker at 350 points and astonished when it hit 550 points. A lot of people were very shaken by this, Tom.
All right, thanks very much. Mike Jensen tonight on Wall Street. Some of the biggest market losers today were, not surprisingly, some of the most widely held stocks, losing between 6 and 12% of their value today alone. A sampling. Compaq Computer was down 8 1/4. Boeing and AT&T both down almost 6. Merck and IBM down 8. NBC's parent company, GE, down 4 points today. As you might expect, the president and his financial advisors were watching all of this closely today, and it did overshadow some heartening news on the federal deficit they had ready to announce. NBC's David Bloom is at the White House tonight, has more for us from there. David, what's going on?
Well, Tom, the economic numbers are good. The federal budget deficit announced today is the lowest since 1974. And so the White House decided to respond publicly to the stock market plunge because, as one of the president's closest economic advisors put it, we can't look like we're holding up here just because there's some trouble in the market. This was powerful symbolism. Treasury Secretary Robert Rubin, who one White House official today called our most reassuring guy, walking down the Treasury Department steps to try to steady the nerves of worried investors.
It is important to remember that the fundamentals of the United States economy are strong and have been for the past several years, and the prospects for continued growth with low inflation and low unemployment are strong.
As the stock market plunged, the president wrapped up a speech just after 2 p.m., phoned Secretary Rubin from his limousine, and sent spokesman Mike McCurry out to brief the press.
We want everyone just to take a deep breath and think about where we are. This is a market that has performed amazingly well in the last several years. It is record levels.
The White House did not want to overreact tonight, which is why we did not hear from the president. But they've been watching the markets all day, talking to Federal Reserve Chairman Alan Greenspan and to foreign governments. As Mike McCurry put it, let's be calm and reasonable. Tom?
Thanks very much, David Bloom at the White House tonight. All over Wall Street and in financial institutions across this country tonight, the wizards are trying to figure out what happens next. Well, there's no way of knowing for sure. Maria Bartiromo covers the market from the floor of the New York Stock Exchange for CNBC all day, every day. Maria, is there any consensus down there tonight?
Well, Tom, it does appear that we will see continued declines, at least at the open of trading tomorrow. At some point, we could see some buyers come in and perhaps a reversal later in the day. But at this point, there is a definite negative psychology going on Wall Street right now. And I think that people will probably want to be cautious, and they'll want to know that all of the excesses are out and the selling is done for now. So they will definitely not be rushing in at the open tomorrow.
And Maria, will they be getting up in the middle of the night to see what's going on in Hong Kong and the Asian markets?
Oh, certainly. People will have their eyes all night on the Asian markets to see exactly what is happening there with regard to the opening of trade. But at some point in the U.S., people will begin to focus more on the fundamentals of the U.S. economy and of the U.S. stock market. Because remember, even though we have seen significant weakness in Asian markets, the U.S. stock market and the economy here is really a world away with regards to putting those two together. So really, people will at some point start focusing on the fact that we do have low interest rates in the U.S., that corporate profits are very strong in the U.S.
All right, thanks very much. Maria Bartiromo tonight from CNBC. Much more on today's historic stock fall. NBC News in Depth tonight. Also tonight, big medical news for men who suffer from impotence.
It really does allow for the spontaneity and the intimacy that all married couples, I think, would like to accomplish.
Could a simple pill change some men's sex lives forever? Later, who really wins when big-time lawyers file those huge class action lawsuits? You might be surprised.
Today, instead of sitting by the window watching life go by, people are out there doing.
Secretly approved her 12th rate hike.
Days later, this same insurance company gave Republicans $25,000.
Want change?
Jim McGreevey will take on the insurance industry, crack down on fraud, and as governor, order a 10% rollback on rates.
I say it's time to change the system.
Jim McGreevey, a governor working for us.
Gloucester County freeholders Dan Mangini and Steve Atkinson, not Jim Atkinson, Republican Steve Atkinson. First they voted against cutting property taxes in 95 and 96. Then they raised them in 97 by $3 million. Mangini had said they needed more county cars. And after Steve Atkinson's business made money from county contracts, he didn't pay over $38,000 in business taxes until he got caught. Democrats Bob Smith and Bob Damager, a new direction for the Gloucester County Board of Freeholders.
On World News Tonight this Tuesday, another record-breaking day on Wall Street. This time the market was going up, way up. The man with AIDS who's accused of having sex with so many young people. What the authorities knew about him early on. And our weekly report about men carrying that spare tire around your middle could be very bad for your heart.
From ABC, this is World News Tonight with Peter Jennings.
Good evening. We're usually reluctant to refer to the roller coaster ride that Wall Street takes us on occasionally, but there is no clearer way to describe the last 48 hours. Yesterday it sinks like a stone. Today it rises like yeast. Right after the opening bell today, the market lost more than 175 points. And then it started to climb, up 230 points in less than an hour. And by the time it was over, the Dow Jones had gained 337 points to close at 74.98. The volume was awesome. For the first time, more than 1 billion shares were traded, and the NASDAQ market gained more than 65 points. So what happened? We go to Wall Street itself first, and ABC's Aaron Brown.
When the investment pros arrived for work this morning, they were hoping for the best.
I think things will be good today. Absolutely going to go up.
But on Wall Street and at trading desks around the country, the misery wasn't quite over. The Dow plunged 180 points before traders could finish their morning coffee. But at about 10, when computer giant IBM announced it would spend $3.5 billion buying back its own shares, traders cheered and the rally was on.
IBM is a motherhood stock, widely watched, widely owned, and when they come out and say, hey, our stock's too cheap, that made everybody feel good.
The market was being moved by the big players, the pension and mutual funds, and the big money managers.
I'd say some of those guys who got scared out of their positions yesterday and this morning are buying back. Plus, going by our phone calls, a lot of individual investors are doing what we think they should do, and that is buying selectively.
But on a day when so many shares were traded, 3 million shares a minute at one point late in the day, it wasn't the little guy moving the market. It was the pros who decided they had sold too much too fast.
All I did today is have second thoughts about where the market should be trading, and it's coming back to where it should be.
High-tech stocks hammered yesterday were market leaders today. But it wasn't just a high-tech rally. Entertainment companies, drug companies, industrial giants were all lifted by the buying surge. And when it was over and the gavel came down, the pros went back to their meetings to look at the numbers to try and figure out what they and the stock market will do next.
Now, Peter, a cautionary note here. 10 years ago, after the crash and the day after, the market also opened sharply lower, just as it did today. It closed with a record one-day gain, just as it did today. But 10 years ago, the market's troubles weren't over then. It still had further to drop. It is a reminder that on Wall Street, one day, even a really good day, does not make a trend.
Okay, Aaron, thanks very much. Aaron Brown on the market. Joining us again tonight to help us understand the day is Todd Buchholz, former director of the Tiger Management Corporation, member of the Bush administration. Aaron's piece raises a couple things we might carry forward there. First of all, we all wondered this morning whether the smaller investor would panic and drive the market down further. Didn't, so what do you think happened?
Well, the smaller investor certainly did not panic. If anything, the small investor overwhelmed his local broker trying to place buy orders. So in fact, what we saw were the investment professionals proved wrong and tried to reverse themselves later in the day.
Now, some of the other professional analysts say the market didn't go down far enough to really cleanse itself and that we now have an unsteady market on our hands.
Well, who knows what cleansing means in this market? Frankly, I think the little investor is looking at the market as a kind of professional wrestling match. And you look at the participants on the floor of the exchanges, and they're badly dressed, they're boisterous, and they yell at each other a lot. And I think the small investor has been wise to ignore that kind of chaos and focus on long-term goals, and that is saving for retirement.
Okay, we shall think of the last 2 days as a professional wrestling match. Thank you, Todd Buchholz, very much indeed. When we come back, we'll have some of the day's other news, including a report tonight on that small New York community where scores of people may have been infected with the AIDS virus. There's fear and loathing there. The ancient kingdom in China tonight is on the China field. So many people care about Tibet here in the U.S. And what the tape measure may tell you about your health. That's our report tonight about men.
This is World News Tonight with Peter Jennings. Brought to you by Tylenol PM.
Thing that lives in the wall! Who are you gonna call, Dick? Ghostbusters! This could be the Halloween that goes too far!
Run, lady, they're crazy!
Third Rock, followed by Working, Wednesday. Then,
a woman